Now, to start with, let's have something that has been really catching the attention of the media. Now, I think for those of you who have been looking at the tokenization space, you probably have come across this news where BlackRock launched this product Build, B-U-I-D-L, and they attracted over 500 million US dollar within 4 months since its launch back in, I think, March, April. Now, and this is something that really caught a lot of the industry outside the surprise, and there's a lot of implication on this. So with that, I just want to go to perhaps CJ and Marcel to ask you to comment on this. So what's the impact of this incident to the broader digital assets community?
Yeah, I'm happy to start. So Marcel from Coinbase Asset Management. I don't know if, how many people watched the program on Who is Satoshi? You see that film? I think they missed the obvious. It's clearly Larry Fink. so it's look, the movement that BlackRock has made into the digital arena, I think it can't be understated. But in the context of their tokenized money fund, this is a learning experience for them. That's how I would read it from the outside. This is just me reading their action from the outside. Why? Because the twin asset. If you think of the benefit of getting onto crypto rails, is that you can manage your entire back office and mid office with a few lines of code, right? Smart contracts then take over. So what do you need to do that? You need a digitally native asset. You don't want a twin asset. You don't want to have an asset that's already functioning just fine in the real world and then just putting a token on top of it. You want it to turn digitally native. Well, before you make that step, you want to make sure you really understand what the value of these tokenized rails are. So this is a natural starting point. And when that goes well, then you start to see natively digital assets, then you start to see more and more assets migrate into digital rails permanently. Certain assets like real estate have very long turnover time, so that's going to take a long time. But I think that's the pathway that they're aiming to hit. So try it out, see how it goes, learn, and then go digitally native. And that's kind of how we look at it, and I think it's critically important. And just one last point, and I'd love to hear CJ's thoughts on this as well, but one last quick point. Think of, if you want a live case in point as to how this plays out, think of ETFs and mutual funds. Mutual funds are still bigger than ETFs. Is there any debate as to which one is a better product? None. ETFs are better. Right? ETFs are just more efficient, more effective for the end investor, and mutual funds are still have a larger share of the market. So these things will take time, but it's really important to see that step. The step that BlackRock has taken in the context of the broader digital arena can't be understated. It's very, very important.
Yeah, thanks a lot for that, Marcel. As you can see by dress sense, I'm the guy that's meant to spice things up. I have a very different opinion on how these things come together. My name is CJ. I run the sales teams over at GSR. We are the largest and oldest market maker in crypto, and one of the only regulated ones actually in the space. RWAs is interesting, right? And to the BlackRock thing, I actually did a bit of research on that after our conversation. Currently, there exists only 27 holders of this current fund. And the reason why is this. When we look at RWAs, and this goes out to the community out there, we have to bifurcate RWAs in terms of the types of RWAs. On one spectrum, there is a complete universe, which are financial RWAs. That's what we have here with BlackRock. And I agree to Marcel's point. It is a proofing concept to prove it can be done. Does this necessarily trickle into the Web3 space? Probably not. But is it a very good signaling effect? Of course, because it gives confidence to other FIs in the space that there is a part of Web3 that they can belong to and not have to worry about where the next rug comes from. The RWA space within the Web3 element is not so much about financial products. And the reason why is this. The issue with the BlackRock tool is it is really only for accredited and professional investors. It is no different from buying a bond. It is no different from buying a stock, if you think about it. The access to what Web3 was about, which is socialization, democratization across the board, retail, it doesn't suit that element yet. But having that proof in concept, well, what do you get? It's a very similar effect to when the Bitcoin ETF was launched. What did that do? That brought in a base case. It brought in a baseline, and it raised the baseline from a couple of years ago. What it means then for builders in the space is legitimacy of a space. And this is key to what we do. So do I think that tokenizing a treasury really affects the builders in this space? No, I don't. Because most of you will still put your money in a savings account, buy your property, same thing. And I agree to Marcel's point. Real estate is an area that you can look towards eventually, but transparently does not make sense in the current form. And we have not figured it out. So I think it stands for something. I anticipate it moving on. I think the previous speaker spoke about Aberdeen looking at the space as well. I think this is net positive for the space. But let's not kid ourselves when it comes to RWA and Web3 native users. It is a very different ballgame.
Well, I'd like to follow on these points by coming back to, I think we had this very interesting conversation about the conspiracy theory that the regulators are purposely dragging their feet to buy time for the large FIs to figure things out. Now, so I think we have that theory, okay? Now, if that's true, then does it mean that the smaller guys, right, the crypto native, pioneers have no chance? Which I don't believe so. Now, but if there's a chance for the crypto native, then obviously they won't go head to head against BlackRock. So if that's the case, then what other segments will be there for the little guys or the younger startup, the innovators? So again, CJ, Marcel?
I'll kick it off. I think it's a very different market. It runs in parallel. And I think that's important. I think the way we have to look at Web3 as builders, a lot of Web3 builders are looking at a world where we can bring all of the money of, let's use an example, AIA and bring it into the Web3 space. It's not going to happen. The reason why is you have reg risk, you have board of governors, you have invest committees that look at this space and they won't touch it. They'll go as far as probably the Bitcoin ETF and that's about it. In terms of competition with what we're building in the space, no, not necessarily. And the reason why is currently in Web3 builders, for RWAs, what we're currently seeing is a build-up of infrastructure. We're putting the right infrastructure in place. Yes, there are one or two protocols out there within native Web3 who are doing things like tokenized treasuries. But even they have the same problem right now. The same problem is if you go to their websites, accredited investors, et cetera, and they're not going to touch that. Because when it comes to things like financial products, legitimacy counts for a lot. Now, what does it mean, though? It means as a Web3 builder, let's take it a step further. Your job is to push the envelope. Look at sectors such as IP, for instance. These are areas which are very interesting because, yes, there's regulation around them, but transparently, there's been no innovation in this space for years. That is where there could be something interesting if you want to move forward there.
Maybe I'll just add a couple of things to that. So I don't think it's a conspiracy theory at all. I think it's kind of common sense, right? If I'm a regulator, money is different from cars. Okay, people have this Uber model in mind. How did Uber get successful? They just forged ahead, and then regulations followed. And in New York City, which is where I've spent most of my adult life, if you bought the medallion for the yellow cab, it went from $1 million to zero. Nobody cared about that person. And then regulations came, and now Uber is just part of our day-to-day life. So when I'm renting a car, that's completely agreeable form of disruption. In money, it's not. There are certain things in money that are just going to be non-negotiable. When you and I send money back and forth internationally, anything above a certain amount is going to be recorded. We don't even pay attention that it's being recorded because for 99.9% of us, it doesn't matter. But for that 0.1% where it does matter, it really matters because then we're getting into the untoward, the terrorist financing and things of that nature. Regulators aren't giving up on that. So whatever tools we introduce to the global financial system, those rules are not going to be skirted. They're going to be required to be integrated for these to scale into the broader mainstream. And then where I think where I do think the existing cohort and the builders can merge is exactly what Chainlink is doing. And if you think of their model, broadly speaking, it's to say all of these things are chains, and now they need to interoperate and communicate. And we're going to be the glue that allows that to happen. Now, fast forward 10 years, we may not even realize that Chainlink is the glue, right? It may just be this quiet glue in the background whose value is tremendous. And everyone else just wants to click the go button and make sure everything runs. So they're interacting with the innovators on the Web3 side, on the crypto side, and and the Swift side, which is about as conservative as you can get. So I think there are going to be elements that pull those units together, but I think it's incumbent on everyone building in the Web3 space to appreciate that banks aren't coming to you, you're also going to them. They got the market, and you're not just going to disrupt them overnight. You're going to have to work together to figure out how to monetize your technologies. I think it's very important.
Well, in our last conversation, I was very inspired by these comments made by CJ regarding if I were an entrepreneur trying to figure out a space for me to have a chance to win. So how should we think about it? I think you brought up a point about the emotional appeal.
Correct.
Right? Now, would you like to elaborate on that point?
So the one thing about Web3, which I love, and my background is traditional finance. I was on the trading floor in Hong Kong for about 10 years. Now I'm based out of Singapore, but you see the differences. And you have to understand the nature of the people in the two different spaces. Web3, dare I say it, you're the artists. I have people in my office in Singapore every week, and they come up with these crazy ideas, like, oh, we can do this, this, this. And I look at them, I'm like, I can barely screw my computer together. What are you doing? And because of that, we have to understand the nature of the people in this space. It's why I bring up IP. What is IP at the end of the day? IP is a very emotional thing to a lot of us, right? Those of you, I'm sure if I ask you to put your hands, you don't have to be embarrassed, don't do it. But I'm sure a lot of you grew up on Pokemon cards. Can you imagine if an IP like that was put into something like this? It holds emotional value. That's where you will get that desired Web3 appeal. It's not by tokenizing the Burj Khalifa and just trying to distribute it to a bunch of retail guys. It's just not going to work. And I think that's why, and we spoke about this quite a bit, we need to understand that builders in this space don't look at financial markets thinking you can go in and make change, right? Guys like us, I think everybody here has had a career in finance. We've been there. We've been part of that machine. We're not going to change it. If you think about it, the most successful RWA, and actually it was Marcel who made me think about this, it was true. The most successful RWA in the world is USDT. It is the most successful one. But let's not get ahead of ourselves thinking we can do every other thing. So start slow, start almost at grassroots level, proof of concepts. That is how you win people over. That is how you get the big boys to look at it and say, there is something there, let's put financing to support something like this.
Well, and ever since that conversation, because of that inspiration, because in my job, I have to tell stories to the media. So then I thought, okay, what kind of examples can I give to media people to make them get it about the emotional side of the tokenized whatever? That's interesting, right? And I thought of this example, and that is the tokenized durians. You are laughing, right? By the way, I'm sure that some of you have eaten durians, the fruits, okay? In Malaysia, I had a business trip to Malaysia back in early August. I talked to some of the digital assets crowd, industry leaders there. I even talked to some of their regulators in Malaysia. They're serious. They're launching it. The tokenized durians is coming. So that's one example I'm going to give.
I'm a Malaysian, and I'm shocked by that. Go figure.
Okay, now, tricky change gear. I'd like to also pick the brains of Jerry and Henry. So Jerry, now you work for the largest IT company in Hong Kong. And also, you guys are also one of the consortium partners in the HMA Stablecoin Regulatory Sandbox. Now, as we talk, you also have some interesting angle about how to sort of get these tokenized products in the mainstream that do not necessarily have to compete with the banks and the FIs. So can you share with the audience about what your thought is?
Sure. Well, I have a slightly different view from CJ and Marcel on some of these topics, right? Because even though I agree with all of you on starting small, starting pilot, I do believe the scope that we're looking at RWA is, the vision of it needs to be bigger, right? Because without that, this thing is not going to go mainstreams. To be honest with you, all the conferences and media we talked about, when we talk about RWA tokenizations, right, the market is still very, very tiny in the grand scheme of things. And there isn't a mainstream story to say that this thing is going to change the world yet. So we do need that vision, in my opinion. And I think the problem of it is that one thing is communication, because it's different world of speaking. And we are not able to articulate the story to the mainstream yet. And I think the second also is our inability to understand how those real assets should be operated and where value gaps can be filled, right? Using the technology we all solve here today. One good example that I can tell you, right? Like it's actually, I think the Chainlink event team did a great job outside, right? There's a real booth out there. There's a little dashboard you can click around. Oh, I mean, I click on RWA tokenization. What does it do? Back to the real estate example, right? Like there's a little house, you use the data feed, and you do CCIP, you send it to 20 different people who can co-share that ownership. You have trust, everything built in. But to me, the most exciting thing is none of that. It's the last very step about yield distribution. That stuff is automatically generated without a finance person, without a whatever person, middleman, giving that to. And if you scale that great Chainlink event example to 1 million times, infrastructure, mega city projects, smart city mega infrastructure, right? I mean, I don't know how many of you are visitors in Hong Kong, but I encourage you to ride the MTR. Ride the MTR, right? You see that that's the world-class #1. No argument for Singapore, right? Like that's the #1 metro system in the world. Yep. By the way, it's not new. That system has been around for 40 years. Why is it still so well maintained? Well, most of the cities have, let's say, less reputable operations. There's a reason for that. They spend billions investing building it. That's the first part. Every city, you go to China, you go to Singapore, you go to Australia, all the new railway are great. But that is a major piece of infrastructure asset that you have to maintain and operate on it. The funding, we can talk about funding, right? How do you fund that project? Hong Kong is a very interesting model. I mean, I can spend 2 hours talking about it, I won't. But that stuff can be tokenized and have a different funding model. But more importantly, Hong Kong has a great management system to actually make decisions properly, to continuously funding it. And that's 20x, 30x the initial investment, the OpEx, making sure the system runs the way it is. And to me, that's not very different from the RWA rents distribution system that we just talked about. Why can we? I mean, actually, it will happen. It's just whether we can make it happen in this room or it take generation, that all the infrastructure projects, all the smart city megastructure projects, right, from funding to construction to procurement to supply chain management to all the investment throughout maintenance cycle should be tokenized. And we should find ways to actually use it to automate some of the decision making. So that's where I see the world is going. Obviously, we need to take it one step at a time. And the technology, obviously, is not mature enough, right? I mean, we had a great evolutionary step yesterday about the CRE, right? I think that's a foundational movement to build better abstractions. And we need a lot more than that. We saw OpenMesh doing some of that for the infrastructure. We need a lot more than that to make it simple, right? For that. So the old school government officials, the MTRs in the world, the smart city builders can actually take advantage of what we're talking about here.
Well, that's great. Now, I think I just want to keep this going. I'd like to go back to Henry now, because just now the three gentlemen talk about some of the bigger picture, the institutional level conversation. So I'd like to change gear, because obviously the KuCoin as a leading exchange, you guys see it all, right? You have a lot of customers on your platform. Now, I'm just curious, because we haven't got a chance to talk, but I'd like to hear from you. When you track the transactions, do you see a lot of recent movements or attention on the RWA, the tokenized projects listed on your exchange? And then, so this is part one. The part two of the question, follow on to this, is that obviously for the customers on your platform, whenever there's a new crypto project being listed, then they have to be educated about what that is. Now, but in a way, I guess personally, just step back, right, as a layman. If I were to introduce something that's backed by a story, right, backed by faith, versus, let's say, the tokenized project, RWAs, is backed by some real stuff, right? Logically, it should be easier, right, to educate the customers on the latter, right, because it's backed by some real stuff as opposed to a story. Now, but I think you guys are in the front line. You see all the customers. Can you share with the audience about what you have been observing?
Yeah, thank you, Ken. First of all, I'd like to thank Chainlink to host this great event, SmartCon, and I think it's very interesting to separate this into Web3 track and the capital markets track, which I think is really one direction you can tell how RWA is going. And also, I'd like to thank Invest Hong Kong for making the efforts in the past 2 years to bring crypto and Web3 companies like ourselves to find home and to build here in Hong Kong. It's a lot of progress here. So my name is Henry Chen. I lead KuCoin's group business development and also global partnership. So as many of you know, KuCoin was founded in 2017, known as a people's exchange. because of our broadly diversified user base in Europe, in MENA, in the APAC. But we really build it based on the foundation of technology and innovation to provide the full service and full financial products to our users, ranging from both crypto native products, but as well as the mainstream products like payment, earn, and wealth. Personally, before joining KuCoin, I had 14 years experience in banking, fintech, and crypto investment asset management. I've seen great transition and development on how the industry has gone, and I think that's what KuCoin is also trying to be in the next 3 to 5 years. So back to the question, I think, yes, we care about our users and what they think about every day and provide them the right service and products. Crypto assets have, in the past 10, 12 years, demonstrated the advantage of a smart contract or blockchain-based financial service and capital markets because of its 24/7 trading, interoperability, global liquidity, and transparency, right? So that's why so many people coming from both crypto native and traditional financial world want to participate and invest in the products. But I think RWA or tokenized asset a bit different, right? If you think about what users do for RWA, really the biggest or the first RWA is stablecoin, right? We're now $170 billion market cap for stablecoin. And what is that for? A lot of people use stablecoin to simply just do cross-border remittance and spending in the local market, especially for those emerging markets where there's a high fluctuation of the currencies. So we see the RWA really as a blockchain-based financial system of financial assets, which provides both corporates, institutions, as well as ordinary people with real financial needs, whether it's spending, wealth, or even treasury management for corporates. So because of that, I think the perception and the service that we have to offer to our user base is very different. Many people rely on RWA as a means to access stable yield, stable income, but based on blockchain's superior technology. So we have to make sure that on the front line, what most important is the asset safety, the transparency, as well as the liquidity that we can provide them, connect with the rest of the asset classes. I think the tokenized Duran case is very, very interesting, but because I come from the TradFi world, I just want to also maybe highlight the broad financial market this year. Many of you who trade both the traditional financial assets and crypto assets will probably observe that there are different asset classes who present the superior return throughout this year, which is very interesting. In Q1, probably the best performing asset class is a crypto asset, especially Bitcoin, Ethereum, thanks to the ETF approval from BlackRock and many other big US asset managers. In Q2, there were a lot of hypes around NVIDIA and AI stocks, right? In Q3, because of global geopolitical issues, gold and a lot of commodity products becomes very, very attractive. And here in Q4, I think people start to look back into crypto assets as well as some of the traditional stock market in the emerging market, for example, China or technology. So how do people freely allocate assets and allocate their investment strategies across these assets? Well, tokenization is a solution, right? Imagine if you have tokenized gold and tokenized stock, and to match with your tokenized fiat money, which is stablecoin, then you can have a seamless transition and asset allocation across different asset classes without having to experience a lot of slippage during the operational or FX or transactional cost. For users, it's a seamless experience, and I think for exchanges, it's really superior in terms of providing the liquidity and total solutions to our users. So I think to summarize, crypto asset versus the particular tokenized asset really differentiate in terms of the use case and target audience. I think most of the crypto assets is used to be for investment, but RWA really has a broader use cases like wealth management, like yield preservation, and many, many more, like even financing. I see a lot of potential where the capital markets entirely will be based on blockchain. So many, many more corporates and institutions will be transact with each other, interact with each other based on tokenized assets.
Well, with that, I think time flies when you're having fun. And I can go on and on together with the guests. In fact, I have another story about tokenized Hello Kitty, okay, in case you're interested. I'm serious, okay, Hello Kitty tokenized. Now, so with that, I just want to again thank our esteemed panelists. So can we have another big hand to our panelists for sharing the great insights with us.
Thank you.